Hey, 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 it's Thursday, March 7th, 2019. Today we're going to trade Euro Dollar, Euro Yen, Euro Swissy, Euro Pound, Euro Aussie, Euro CAD, maybe some gold, maybe some oil, maybe some yen, maybe some dollars. That's up to you. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, never risk money you can't afford to lose. Go! Hey, good morning, currency traders. What's going on? Do some Euro today. I stink, huh? Oh, hey, by the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here today. Thank you for being a subscriber of the Forex.Today YouTube channel, where we do our webinars, 7:30 in the morning, Monday through Friday. Except tomorrow is non-farm payroll, so I'll be over at the FX Street site. So make sure you register and attend for that. That's separate from here. Today I will conduct technical and fundamental analysis. Cool. So that means get involved, ask questions. The more you participate, the better off you're going to be. Also, thank you very much for being a client of Traders Way. You either have a demo account or a variable spread account or a fixed spread account or an ECN account. Either way, thank you very much. And sort of as an added bonus for your loyalty and respect that you show us, if you've obviously downloaded the MT4 trading platform from Traders Way in your back office. So in the link below, hey Pedro, thank you. In the link below, or in the video description below, there's a link where you can download all my chart setups and indicators and all that kind of stuff, all my profiles. It's like 100 different things that all get plugged together into your MT4 for free, for show. So anyways, that's my thank you to you. So thank you very much. Anything else? Good job. And if you're new, please visit tradersway.com and open an account today. Join the family. All right. La 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 la. Oh, I didn't even mention Euro Kiwi. So that's a great place to start. Okay. Generally speaking, we are in a large macro sell zone. We got this going on. We got this going on. So let's just connect the two. That was supposed to be connected. So that's one giant sell zone if you're a bear on a macro level. Okay. On more of a micro level, on a weekly level, so that we'll label this monthly. Okay. So this is now on a weekly level. The sell zone is here from this bottom upward. And it's not gonna, it doesn't highlight over highlight, so let me change color then. So the weekly sell zone is here. Cool, right? So there seems to be a little bit of an overlap if you're a bear. Downward pressure. Okay. And, even though you'd like it to trend right now, there's that and there's that. So you're not on a free and clear plan. But if you're a bear, that's kind of what you're looking at, and you're thinking sort of down, up, down, up, down, up, down. Okay. Any bulls out there? Well, very much the same is true here. This is your buy zone if you're a bull, but and you're lining this up as I just showed you. So even a little farther down is going to be better for you. But anyways, that's the general macro level buy zone. This is the weekly buy zone here. So, right? So it's the first time. I don't know why I say that. Oh, sorry, I was reading someone else's. It's only confusing, is what I wanted to say. It's only confusing if you don't know what you want to do. Okay? What's up, K-Dog? It's only confusing if you don't have a bias. It's only confusing if you don't have a general plan. If you knew last week you were a bull, and this week you're a bull, and next week you'll be a bull, then this is pretty easy. You buy it low. Remember, your charts don't tell you why. They just tell you price and time. So rest assured, when it gets up to here, if you're a bull, let's say you're a bull and you bought it low in this black zone, you will be challenged in that green zone. You will. We don't know who's going to win, but that's that. And therefore, a bear is going to take it down here. They will. Otherwise, they're not a bear. And if they're neither a bull or a bear, they're a pig, and pigs get slaughtered, and it doesn't matter. It's just free money for everybody. Hey, by the way, I've been thinking more and more about our idea we had about 3 weeks ago about getting together in an exotic location with beautiful warm weather and awesome food. We get together in this little bit of paradise, and our common denominator, even though we're from different cultures and from around the world, different races, different sexes, different religions, our common denominator is we have a love and passion and a success with Forex. So we bring in not like how to trade experts. Like, I don't want to go up there and say, hey, everybody, this is what a pivot point is. Woo! Right? No, but like bring in like experts from outside our technical and fundamental analysis world, maybe. Have lawyers come in, have psychologists come in, that kind of stuff. Have like a CFO from an international company that actually has to hedge currencies and stuff like that. Maybe bring in a true hedge fund manager that's got $1 billion or more. I mean, because this is how it works. I call up a hedge fund manager that has $1 billion trading Forex. I'm like, hey, you want to come to this exotic location? I'll fly you up, put you in a hotel, give you food, and everyone will worship you for about 3 hours. How does that sound? Yeah, so that shouldn't be too difficult. And just say, and then analyze how they trade. They probably suck, but that will be the biggest success where you're like, oh my God, that guy's got $1 billion and he sucks, right? Then he goes home, this tail between his legs, and we're like, ah ha ha, yeah. So anyways, I've been thinking about it. I don't have time this year, but what are you doing in, September or August of 2021? Yeah, Fiji or something like that. I'd like to be a little closer to somebody. Fiji's not close to anybody, but that type of thing. Yeah, South Africa would be nice. But anyways, I want to do something different. Ibiza, yeah, Ibiza's neat. I'm thinking probably the Caribbean, but Malaysia is probably pretty high on my list as well. Just remember, I'm ripping off a friend of mine. He was actually an employee of mine, and we both worked in the same nonprofit together. That's how I met him. So one day he called me up and he's like, "Hey man, I'm in the Silicon Valley now. Do you have anything for me to do?" I'm like, "Hey, swing on by." So at the time, I was working in a startup in the basement of a rundown apartment building in the Russian district. The lights in the hallways didn't even work, and we were down in this basement. It was so bad that outside the basement door into the back alley, there was a sewer, and next door to our office was like a Chinese restaurant, and every night they would illegally dump like raw fish guts down the sewer in front of our front door. That's how bad this place was. So I convinced him to join and went on to be a success. And then when I left the company, I replaced myself with him. And then he's gone on to be super, super, super successul. You know, he hangs out with Richard Branson and and other famous people. And so he does something similar where he just gets together with really interesting people from all different walks of life, and they just learn. They sit on the beach and they learn from very interesting people. Sort of like a private TED Talk, but the TED Talk isn't in in an auditorium. TED Talk is, you know, in the swimming pool or on the beach. So anyway, so yeah, so let's get the thing going. Hang on. La 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 la. Yeah, crikey, huh? Oh, but here's the real news. Forgotten how to pop this out. Anyways, so we got to find out more about this.
The euro taking a leg lower here on the TLTRO announcement, 112.85, down 21 pips in the euro. Broker shares are trading lower, down about 8.5% after their fourth quarter report.
So anyways, just sort of like a quick update here. Wow, look at that, huh? So anyways, let's just get through this. Let's take a look around. So bears sell high, bulls sell low. No real trend behind this, so I'd be cautious to begin with. Euro pig, not a lot going on here. It's been a downtrend, so let's define that. Like more recently, I'd say, you know, this is more down than up.
The Italian yields, or the yields in the periphery lower on the new
Okay, so in the future, you would expect something like this.
Lower by a basis point. Spanish yields also just get back the bulk of the earlier rise in yield. So lower yields here in the periphery as this new TLTRO program is announced.
Okay.
And just a recap here. This is ahead of the ECB press conference, where in all likelihood they will come out now and adjust lower their inflation forecast for the long term. We are expecting an update on staff projections, but the news here on the TLTROs and the wording of the statement, adjusted statement, likely indicating that we will see a cut there for projections going forward from the ECB when their press conference gets underway.
Cool. Well, that gives them something to talk about. So we knew they were not going to adjust rates. We knew they were going to adjust guidance. And we knew there was going to be a new program, but we don't know anything about the program. So, right? So we'll see what the TLTRO is going to be. And likely it's not going to be enough to save anybody. That's the problem.
The German Bund future 163.71, just a few ticks off session highs, still down about 2 basis points in the German 10-year.
So just one thought here. What is the likelihood the ECB is going to raise interest rates in the next 3 years? Does anyone have an opinion on that? Well, Liam got a scalp. Right on, buddy. Joust is 0. David M. low. Low. Chuck Ducks is 60%. So here's my thought. We had a discussion about a week or two ago about how I use the real estate super cycle overlapping with a business and interest rate cycle or monetary cycle, and how that could lead to a recession, let's say closer to the end of 3 years from now than versus tomorrow, like 2 or 3 years from now. So if 2 to 3 years from now interest rates are still negative, or let's say 0 in Europe, and the United States goes into recession, what is the ECB going to do? Because if the United States goes into recession, Europe's going to go into a depression, because the United States is booming and there's a giant sucking sound out of Europe, right? So what happens if the United States takes a 30 or 40% decline in productivity? But David, it's already negative and it's not working, David. So how could they lower interest rates? Starting September 2019, new operating. Cool. So anyways, it's just, right? It's interesting to think about, right? So I think they should hurry up and get going and do something while they still can. And the question is, did they learn anything? So remember, the European response to the financial crisis was to raise interest rates. The British response to the crisis was to come out and say it's just a Yankee problem. It's just a problem of the Yanks. Like, what? And then when the ECB finally kind of got on board and cut interest rates, they didn't do quantitative easing. The German response to the financial crisis was to jack up taxes, cut spending. Like, what planet are they from? How is that going to help the economy, right? So anyways, the question is, will the European response be better? Was anything learned? The United States, within 3 years, was back to hiring people. 10 years later, we still have 12% unemployment in Europe. You're like, whoa, my gosh, 12%, right? Some of that is just their as I've said before, the consequence of a socialist capitalist sort of democracy. And I don't mean that in a bad way. It's just a social choice. But the consequence is always going to be higher unemployment. Just is becoming more and more probable of euro going to shambles. Well, so the problem, I guess, there is, Greece needed to be devalued, and Germans were freaked out about inflation. So there you are, you had the Greeks in rampant deflation, stifling, choking on their own blood deflation. And the Germans are worried, like, oh my God, what if we get 1% inflation, right? And you need two different policies for that, and that couldn't happen. And it's weird to think that that's how they designed it. But then again, Maine, the state in the United States, Maine and California are considered the same, right? Georgia and Iowa are the same in terms of America. So the Americans are doing something right, but I don't know. I really thought the euro was going to be much better. I thought the Europeans would have taken everything good that the Americans had figured out and then made it better. It just never happened. Well, yeah, but why does it? So here's a bigger question, Chuck, and maybe it's worth you writing a research paper on. What are the similarities and differences between, how the United States makes the dichotomy of California and Maine work compared to Germany and Greece? Why does it not work? Well, hey, Jeremy, maybe we'll have so much artificial intelligence and robots working for us that there won't even be a need for money, because we'll have so much resources for so cheap that you just won't even need money. You just walk up to your replicator and say, tea, Earl Grey, hot. And it goes, and you're like, oh. Hey, does anyone want something? I'm over at the replicator. Curly fries? Yeah, you like them spicy? French fries, curly, spicy. Oh, and extra crispy. Right? Why do you need money? And that gets explained, actually. Money doesn't go away until energy is free. So that's been explored before, and the key is energy. When energy is free, then there will be no need for currency. Okay, so what do you think here? Seems range bound. Are we at the top of the range? Well, there's sort of a middle ground here. And maybe if you were scalping, you could play that, but I'd be worried that we're, because sometimes ranges work like this, and this is how I kind of break this down. There's a bottom range, okay? And very often, not in this case, well, sort of in this case, but every so often, it just pops up to here, and then you move in this kind of realm, right? And you just break to the next range, and then up to the next range, and then back down to this range, and back down to this range, and then back up to this range. and there's ranges on top of ranges, but ultimately no real trend. So does any of this look like awesome to you? That move's interesting. That's obviously the CAD news, right? What do you guys think about this? Perfect. Isn't that awesome? Absolutely sickening perfect. Boom. Done for the month now, though. Now you're like, well, what's going to happen next? Well, one rule of engagement, so to speak, is that if you hit this target early in the month, and you might say the 6th or 7th is early, you're right, the 6th or 5th even, when we hit that, was it the 5th? 6th. So you might say the first 6 days out of 31 days you would consider that early. So then the next thought, and we don't know how it'll happen, most likely you'll need a reversal pattern, but eventually it should work its way back to the central or near the central. And in that case, you can see it's actually next week's trade plan, right? This is Monday's trade plan, and this is next week's target. So this could just fart around. NFP takes it back around. Euro collapses or CAD gets a recovery. Okay. Yeah, but yeah, ridiculous, right? Isn't that just sickening? Now, what's the likelihood you guys were that aggressive to be on it? No, probably not. But nonetheless, it did happen, and it should bring you a confidence to at least. Okay. And there's a bit of an Arctic turtle here because on the monthly basis, we're only supposed to be hitting this target. Based on the entry, that's the projected exit. Okay, but check it out. When this actually opened, it was more of a central, right? You could almost call it like this on a weekly basis. And therefore, the weekly guys are trying to get this. And ultimately, the top was this. Kind of interesting. It's almost like they split the difference, but right. So this is stretching out to reach the weekly target, and then of course it comes back into the monthly. That's an Arctic turtle stretching its neck out. And what happens to a turtle when it stretches its neck out too far? Gets chopped off. Yeah. Yeah. Thank you, Langa. Yeah, you're right. Yeah. Cool. You are not alone. Question: why is the central pivot where it will work to if it's truly not the center? It's just a pattern, Michael. And it's very general. I don't know if it's going to get there or go past it, but it's more of a thought process that you should stop in most scenarios. So let's go back to that. All it's telling me is that in the past, having looked at many, many other scenarios with similar situations, okay, I don't care if you're a bull and you just made a boatload of money, get the hell out, is what it tells me. At the very least, stop buying. And you can see it took a day, more than a half a day. If anything, if you were going to buy, you could buy down low again, right? So, and that sets up the double top, which then next week sets up the move down. Okay. So yeah, you could buy down here if you want. You have all the permission. This is just the simple role reversal, right? Nothing complicated about that. So you have permission to buy up here. But when you're up here, though, when you're up here, so let's go back all these candles ago. So yesterday, you're in here. There should be a screeching halt, stop sign. Get the hell out. Take your money and run. Run, Forrest, run! Right? I mean, you're done. And you're done for quite some time. Okay? So that's at the very least, get the hell out. Oh, but. Okay. And also the other thing I pointed out is when there was an overlap of weekly, it was enticing enough that you're going to probably get a few extra pips than normal out of it without the overlap. But at the end of the day, that is the zone where you walk. Know when to hold them, know when to fold them, know when to walk away, know when to run. Okay? That's what that's all about. So it can be a setup for a counter trend trade, but it's definitely a take profit and run. Okay. Check this out. Nothing's really happened here, but we
off about 0.25%.
We know Kiwi's weak.
80 being paid. Again, some of the analysts just looking at the details of the ECB statements there. Again, a little bit of a surprise with that Teltro announcement, but the program is a 2-year program. Some disappointment on the time frame of that Teltro. And stops on the downside in the euro, whether or not they'll be tested, but there are stops as we've been in this quarterly range, actually since last October, almost 6 months of the trading range there for the euro.
Okay. When I have discovered where the pivots are for a day, what the blue lines represent? What blue lines? Oh my God. So you're not using my templates.
Late July.
Hang on. So you're doing, I think you got pivots. You're probably, so you're not using my templates, Jen? You're just going it alone, huh? Going nay. So I set everything up when you use the templates. I set everything up, but you're probably with the blue line. So you're probably in here, pivots, right? So I have false, and false plot pivots. And it looks like, yeah, they're blue. Yeah, so you're not using the templates if you're drawing pivots, but you should just turn those off. A pivot is something I invented probably around when I wrote the book. I don't think they're in the book, though, because it was a new thing back then. But I created pivots from a combination of pivots and Fibonacci levels. Okay. And it comes out of my day trading strategy of the, Asian fade stuff. And so I used a lot of Fibonacci with my day trading setup, and then overlapping some pivots, and then I had someone custom program it so that it would draw pivot levels and pivot levels. And then, and in particular, and I don't think this one does it either, but maybe why it wasn't around for that part. But I would look at extension levels. And I think what these Fibots are retracements. But you know what? Let's turn them on. Yeah, so he's only so they're here. They're hard to see, right? Yeah, he's only got retracements, and I actually used extensions, so he didn't program it right. Okay, but anyways, that's what a Fibot is. But you know, I don't use them, so in my template, when you use the template, it turns all that off because I'm not using Fibots like that anymore. In fact, I never really used it. So it's interesting, you know, if we find them wherever, why it's gone. But I didn't use them this way, although you can. And you know what? Maybe I did, overlapping with pivots. But to me, the more interesting part is the extension, because I would have known whether I was a bull or a bear. So to me, I'm more interested in resistance. Like entering a trade is usually really easy. Like if you're a bull, right? Think about it. If you're a bull and you're at support, or right, like if you're a bull, where do you buy? At support. Like why is that complicated? Never. The entry is easy. The question is, to me, the more interesting question is, will it break this resistance and get to some sort of an extension? And that's where I have to analyze, okay, well, what will the other bulls do as well? Oh, well, they're going to want to go for this pivot. They're going to want to go for this profit zone. They're going to, you know, so you'll look at a fib like this, and I want to know the extension. And I say, oh my God. Okay. This is a 121.4. But by the way, I'm the only person on the entire planet that uses 121.4, unless you're an old-time FX spook camper. But I invented the 121.4 as well. Then I look at this and I see a monthly pivot. And then I see a weekly profit zone. I'm like, oh, okay, so that gives me confidence. So if I'm a bull, I'm going to buy here. There's no doubt about it. Okay, I'm going to buy in here, and I'm taking it up here. So to me, the extensions are even more interesting than a retracement. Okay, and that's what Fibots are. But anyways, kill the Fibots. Yeah, well, they're Fibonacci levels, but more important to me are the see. So, like for example, how do you measure a 382 retracement? How do you measure it? Yeah, Kevin, I invented the 121.4. I'm self-taught, so I was trying to figure out Fibonacci on my own. That's why I draw my Fibonacci studies upside down. I didn't know any better. Actually, I did know better. I did it on purpose. And then I used math and ratios, and I figured out 121.4. And by the way, it works like a charm. But no one ever taught. There was nothing. No one taught Fibonacci when I started trading. I couldn't find anything. I went to bookstores and libraries, and there was online stuff. Nobody knew what a Fibonacci was. So I figured it out. There was some really basic stuff, and my God, I remember it was DVDs, and I put a DVD in, and it would say, oh, well, if you look at the way that a tree grows and it has its branches, it's just a golden ratio of how the fuck you, pardon my French. What bullshit. So anyways, do you know why Fibonacci works? Because really, get rid of Fibonacci. Listen to Wayne McDonald. How about a 33.3% retracement, a 50% retracement, or a 66.6% retracement? It will work just as well. There's no golden ratio. It's not how trees grow. It's not like how many lumps a sea star has on its skin. Therefore, it just works naturally because it's, oh my God, what a load of nonsense that is. Holy smokes, people believe that. Gee whiz. So anyways, where were we? I don't know what's going on anymore. You guys get me all fired up. Jimbo, if that's true, I couldn't find any books 15 or 20 years ago. But Jimbo, I'll tell you my personal experience. Okay, I'll tell you my personal experience. I went through and I was trying to figure out how it worked. Okay, and I looked at this distance here is equal to this distance here. And this is half, so this distance here is equal to that distance there. I don't know where the 786 comes from, but I thought about it, and I'm like, well, what about this distance from here to the 786? So I took 100, which is this distance from here to here, 100%, minus the 786, which is this here to this here, and I got 21.4. 21.4. I thought about that. I'm like, well, that's really interesting. So I want to take this distance now, and I want to apply it up here. And that gets me the 121.4. And I said to myself, I wonder if that will work. Okay. And sure enough, it worked really well, and I used it for many, many, many years. Okay. However, later on in my life, Fibonacci stuff did come out, and Fibonacci does not use 121.4. Leonardo Fibonacci does not use 121.4. They use something else. I can't even tell you what it is because I don't remember. All I remember is it's different from what I use. And I don't really give a damn about the other stuff because what I used worked really, 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 really well. So I'm like, I like my way better. But again, I'm self-taught, right? I've never seen it anywhere else. But again, I haven't learned how to trade from other people. But by the way, though, Jimbo, doing this for 15 years, you are the first person to tell me I'm wrong on that. You are absolutely the first person like, wait, man, people do this. I read it in books. First of all, I couldn't find any books 20 years ago. And lastly, not one other person has ever told me that. Now, maybe because they don't want to hurt my feelings or it's embarrassing or, I don't know, but whatever. Okay. By the way, Jimbo, email me the name of the books, and I'd like to read them and see what else is similar. Okay. Now, if it's less than 20 years old, I would not be shocked if I taught that person how to trade. There are lots of people that have come through my doors and then rehashed my stuff, which is just that's the game. But I know the personal struggle and strife and pain and suffering I went through to teach myself how to trade. And I know how I figured out everything. I came up with these colors. I invented Fibonacci or Fibbits. I invented those. I custom programmed all my pivots. You couldn't get them anywhere else. So on and so forth. Right? So anyway, so I have a life story. I can tell you the day I named these. I can tell you where I was sitting when I came up with the name Pivot Profit Zone. So if you've heard it anywhere else, it's mine, dude. I was there when I did it. So that's cool. That's really cool. So it's just my life story. Is that right? Well, don't put it here. Email me, wayne@fxbootcamp.com. Cool. So anyways, that's just my life story, guys. So it's just like, Yeah, it's just, that's how we go. So anyway, so how do you calculate the 382 is the question. Well, you take the high of the range and the low of the range. Okay, that looks easy here. But in many cases, the top and bottom of the range is incredibly subjective. What range? That range? Which range? Were you measuring this range? Oh, look, it's a 618. Or were you measuring this range? Oh, look, it's a 382. Which range? Right? Which range? Is it a 382 or is it a 618? Yes. So that's why I don't use, fib ratios as much, because I don't know what the market is measuring and whose market. Okay. Now, when you're using pivot points, it uses highs and lows as well. And I use them to measure retracements as well. But the range is not subjective. If that was yesterday, that was yesterday. Right? And that's actually last week or 2 weeks ago. There's a week, not subjective. There's a week, not subjective. There's a week, not subjective. Okay. So I really like that. So, for example, if I'm a bear, okay, based on last month's range of this high to this low, and based on where we closed, right, calculations were made. So if I'm a bear now and I want to get short, what's my projected range for the month of March? Here. It's not opinion, it's not subjective. The only thing subjective is whether I'm a bull or a bear. In this case, I'm a bear. Yeah. Well, Jimbo, keeping it real insinuates or implies that I'm not keeping it real. I'm telling you my life story. And there definitely were not books that I came across, and I desperately searched for books. I couldn't find anything. So how did I learn MACD, for example? I once saw a video, because everything I bought back in the day was crap, so I very quickly stopped buying, but I did buy a video somewhere, and the person coming out kept calling it the MACD, the MACD, the MACD. I'm like, what the hell is this person talking about? And then you very quickly realize they're just rehashing some other idiot stuff, right? So anyways, then I did lots of research. Like I said, I'm telling you, I did exhaustive research trying to figure out these indicators. And I came across an old audio recording from like the late 70s or early 80s, an audio recording of Gerald Appel. Appel, I think it's Appel. Gerald Appel invented the MACD. So I listened to his stuff. Right? So I like to get to the source of things. And most of what I use is actually just stuff I discovered through, like ridiculous, sickening work ethic stuff, through ridiculous, sickening levels of studying charts, asking myself very deep questions and crunching the numbers, and just as close to data science as you could possibly come up with. And that became my rules of engagement, right? Anyways. Cool. So I'm keeping it real, buddy. Okay. Anyways, so cool. If you're a bear, this was perfect. Okay. If you're a bull, you've been waiting this whole time, and plan A is right there. Okay, I'm not saying it's going up, but if you want it to go up, that is a great place for it to go up. So what I would do if I were me, I would now drop into something smaller time frame. And do you think I should look for some sort of reversal pattern in here? Yeah. Oh, Michael brings up a good point. Let's go back to that. Michael says, well, the opposite of subjective is objective, right? So yeah, so it's those using weeklies are using weeklies, but we're not debating over how to calculate a weekly pivot. High plus low plus close, right? We don't debate monthly either. Okay? We don't know who's using them, but those using them will use these calculations. And my observations tell me, right? Look at my observations tell me lots of people use them. For example, this predicts that. Boom. This predicts that. Went a little higher. Oh, well. Boo-hoo, right? There's probably monthly up there. Arctic turtle. But anyways, that's why I like to use combinations of these things. And once I have a plan now, so let's go into that. Let's say I have a plan. I am waiting for this. I want this to go up. So my plan A, right? Plan A, if I'm a bull, okay, is to look for a reversal here, right here. That's plan A. Let's do it there. Plan B is down here. And I'm just as excited about plan B as I am about plan A. In fact, I'm indifferent. So this would have to drop, okay? Actually, I'm not indifferent. This would be better to stop falling. The more it falls, because I want to keep this out of Fibonacci as well. And I want to keep this above that role reversal. So yeah, I do prefer plan A. If plan B drops, I'm going to be a little nervous Nelly about it. Okay, and maybe it's just before non-farm payrolls, not the right trade. This might be next week's setup, right? Michael, that's up to you, right? Oh, Vic says, what if you want to trade these things, but you don't have the time? Well, first of all, I'd learn how to swing trade. Second of all, you're going to need to use limit orders as well. And you're going to need your auto stop indicator so that it will put your stop and your limit. Okay, that's how I think you should do that. Yeah, why not? Specific measurable, right? No, speed, right? Speed, market, price. Yeah, the whole point is that you're separating market from price. You're constantly looking for price support and resistance, market support and resistance, and then putting trade plans together. Is the market moving up or down? And let's say you answer up. Okay, if it's moving up, how fast is it moving up? All these things are very, very, very important. Right? Cool. Don't forget, places like this are going to be areas of congestion. Some of these are such good swing trades that they just might move for quite some time. How do you get the auto stop? It's part of the download package. There's a download link below this video. Right? You guys see it? Well, I guess you see my little window, so I got to do it this way. All right, see right there in the description, it says download all my indicators for free, my chart templates and stuff for free. It's in there. Click it and download it. And by the way, the programmer is programming right now a new version of that download link, and I will be charging money. Michael, if you downloaded it like when I first put it up many months ago, yeah, that version I put the wrong one in. But it should be there now. Okay. Right on. Thank you, Eds. Well, let's take a look at that. Press conference.
.6%, while the back month non-farm productivity was revised lower to 1.8%. Continuing jobless claims at 1.75 million, in line with expectations. And Canada building permits dropping 5.5%, a bigger drop than the 5% expected. The back month was revised higher to 6.4%. Again, non-farm productivity coming in at 1.9%, 0.4 higher than expected, but the back quarter was revised lower. While unit labor costs jumping 2%, 0.3 higher than expected, and the back month there was revised higher to 1.6% from 0.9%.
So you got to be careful in this euro dollar. You're supposed to be getting out on a weekly basis. This is high risk pips, guys, if you're moving with it. Now the interesting thing, though, that there has been a fundamental change with another. I think what the market is saying is this is another wimpy, weak move by the ECB. They're like, oh my God, they keep blowing it. They have opportunities to do something great, and they don't. Right? They have an opportunity to be great, and they wimp out. So the market punishes them. Like if it was the United States or China, what would they do? Boom, $1 trillion, free money for everybody. Right? Oh, well, we're going to do things. It'll be whatever, right? So the world's punishing them. So anyway, so that is fundamentals. And I often think of them, this is a terrible analogy, but I think of them as a tsunami. That's just the image I have. And as soon as I think of it, I think of like this terrible water rushing through a city street, cars and buildings and unfortunate going by. And you just can't swim against that. So it's not that I'm saying buy this. What I'm saying is be careful because this can bounce here, but it's best to let it happen. So if it breaks lower, look for a retracement. Like, don't buy this because it can't fall any farther. Don't do that. Don't do that. Okay? So treat it like a break if you're going to do anything. And there might not be enough time. That might have just been the move. And then it bounces back up, and that's cool. You'll catch it tomorrow, right? So just, if it's going to break, let it break. Catch a pullback or whatever. Create a smaller time frame trade plan. Scalp it on the 5 minute if you want. Right? Down, 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 up, up, sell. Down, 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 up, up, sell. down, 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 down. This is straight out of the swing trading course, straight out of FX Bootcamp. Very basic price action trading. If you don't know how to do price action trading, you're not going to be successful in these moments. So you're going to look for a lower low, a lower high, and a lower low, that kind of thing. Right on, Pieter. So you notice that I started the webinar today focused on euro, so I'm assuming you've got your focus on that as well. Okay, this is a danger zone, definitely counter trend plausible. This can fall forever, this can fall, yeah, forever. And this one I'd worry about.
Follow-up here, are you officials saying a Greek disbursement decision is not likely on Monday?
By the way, in faster moving markets too, this is another opportunity to use the auto stop, where you can just over and over and over again do like 1530, 1530, 1530. If you want to scalp your way through the move.
There needs to be just known that they'll keep doing the full allotments operations for as long as necessary. And these decisions are aimed at lifting inflation.
Liam, this is tradethenews.com. I've had a site license with them for 12 years, I think.
Draghi saying the weakening in the economic data points to a sizable moderation in the pace of the expansion.
That's the euro dollars.
Draghi citing geopolitical factors and protectionism as weights on sentiment, noting that underlying inflation is muted.
Okay. So this has changed. Remember how you said mid 2020? So now it's or all the way through 2019. Very interesting.
Again, Draghi's just talking about they're ready to adjust all instruments here. Again, Draghi just announcing these steps to help lift inflation towards the target.
And the Italian bank index at a 5-month high as ECB Draghi continues his press conference.
Yeah, we should get these stat projections shortly from the ECB. Again, near-term growth weaker than anticipated.
Reflecting the slowdown in external demand, compounded by some country and sector-specific factors. The impact of these factors is turning out to be somewhat longer lasting, which suggests that the near-term growth outlook will be weaker.
South Africa would be selling 1 billion rand in 91-day bills on March 8th.
Looking ahead,
South Africa.
the effect of these adverse factors is expected to unwind. The euro area expansion will continue to be supported by favorable financing conditions.
ECB cutting the growth this year to 1.1. That's a 0.6 reduction in growth for this year on these stat projections. Again, a big cut there in the growth forecast.
Yeah, but we knew there was going to be a cut. We knew. We talked about it before.
Trimmed by 10 to 1.6%. The 2021 growth is maintained at 1.5%.
These projections foresee annual rate GDP increasing by
Ron, thank you, Michael. I appreciate that.
In 2019, 1.6% in 2020.
As expected, ECB cutting growth this year and next year growth. They maintain the medium-term outlook at 1.5%. We'll get the inflation updates shortly.
Draghi reiterating that risks are tilted to the downside.
The outlook for real GDP growth has been revised down substantially in 2019 and slightly in 2020. The risks surrounding the euro area growth outlook are still tilted to the downside on account of on account of the persistence of uncertainties related to geopolitical factors, the threat of protectionism, and vulnerabilities.
You're on the middle part of the 112.
Why pay for Trade the News?
Cuts the growth forecast from this stat projections.
Why wouldn't you?
Oh, about 0.5% there. Middle part of the 112. 112.54.
1.5% in February.
Like, why wouldn't you?
2019, after 1.4 in January.
Right?
Reflecting somewhat higher energy and food price inflation.
It's not like I don't have any money. And this is my profession. I hate watching... Well, I shouldn't say that. I watch CNBC and Bloomberg with the sound off. Because it's
measures of underlying inflation remain generally muted.
I do it only because I get lonely, really. I watch CNBC and Bloomberg with the sound off, but I like to have talking heads around just because it's so lonely. But as far as like news releases, getting news instantly, why would I not pay money to have people watch the global markets 24 hours a day so that if something happens like an earthquake in Chile, they tell me now? Now. Like, why would I not pay money for that?
ECB staff macroeconomic projections for the euro area, which foresee
that's it. When it comes to trading, it's a business expense.
1.5 in 2020,
right?
And 1.6 in 2021.
And then, like,
compared with the December,
I get a lot of, heckling because I have a lot of computer screens. Why would I not have a lot of computer screens? What's wrong with all the computer screens?
Across the projection horizon.
Like, if you did this all day, every day, like, why would you not? Oh, well, I'm such a good trader. I don't need all of that. Yeah, I just like it. Like, I have access to all information instantly. Like, and it's only money. And to me, it's a tax write-off. I live in America. I get taxed at the yin-yang. It's a business expense. Who cares? It's like free. It's not even... It's so... whatever. I mean, gee whiz. Why do I pay money for Trade the News? Because it's awesome.
Moderation in credit dynamics. The narrow monetary aggregate M1 remained the main contributor to broad money growth.
Yeah.
The annual growth rate of loans to non-financial
But
corporations...
I have a strong relationship with them. Like, they allow me to show this to you in webinars and stuff.
December last year. reflecting a base effect.
Usually that's a big no-no.
Also, in some
But
countries,
I've known them since
typical
they were a
lagged
tiny little
reaction
startup.
to the slowdown in economic activity, while the annual growth rate of loans to households.
Yeah, Pedro, if you didn't have any money.
3.2%.
Now, Pedro, if you had a little bit of money,
Borrowing
you should
conditions
take
for
a
firms and households,
training course at FX Bootcamp.
as the monetary policy measures put in place
Take
since
them all.
2014
It's not that expensive.
continue to support access to financing, particular for small and medium-sized enterprises.
Brinsley has 3. Yeah.
Policy measures decided today, and in particular the new series of TLTROs.
Yeah, right on, Caddy. Yeah. It's just,
That bank lending conditions
it's like one of these things, like,
favorable going.
let's put it this way. When you start to make really good money as a trader, suddenly you get obsessed with, you want to have everything you can possibly get your hands on that might make you slightly better, or to keep you strong, whatever that means, right? And if that means if that means $1,000 chair, right? Is it because it's $1,000 chair? I want to show it off. I'm so awesome. No, dude, I sit in my chair a lot. I spend so much time in my chair as a trader. It's like crazy how much time I spend in my chair. I should have an awesome chair. Hell yeah. Awesome chair, business expense, boom. But like, because I do things like wear the skin off the tailbone, right? So like, get yourself an awesome chair. Get yourself an awesome rig. Go from 1 to 3, 3 to 6, 6 to 12, 12 to 18. Is it necessary? No, of course not. It's ridiculous. If I had a hedge fund and you guys were working for me, I would have a masseuse come in probably once or twice a week, and just to massage your shoulders and your mouse arm and massage your lower back. I'd probably have someone come in once a week and shine all your shoes. So I did an executive internship at Payne Weber in 1990. It's not even on my resume. It's not on my LinkedIn profile. But anyways, I worked for Payne Weber for a short amount of time, some executive internship. And I actually did cold calling on the Dun & Bradstreet books, the D&B books. I had my own office with a beautiful view of the back alley. But it was a beautiful office. It was great. There's skyscrapers everywhere, so it was dark, and I had a view of a back alley. But anyways, I had my own office. And it was filled with bookshelves with Dun & Bradstreet books. And they came in, and they sat me down, like, call them. I said, call who? Them, all of them. Right? And by the way, I still remember when I think of it now, as soon as I thought of it, about every 3 or 4 minutes, you could hear a modem connect, because someone would want to check their email somewhere in the office, and you hear this, and it was modems. I'm like, oh, do you have a 14.4? No, I have a 28.8. No shot. 28.8 modem. You're like downloading pictures and stuff, right? But anyways, I think it was Tuesdays or Wednesdays. Outside of everyone's office, you'd have like 3 or 4 pairs of shoes. And it was because a guy would come up, take the shoes, shine them in the stairwell of the office, and bring them back, and you'd go through. So people would bring all their shoes from their closet, not just the shoes they're wearing that day. So everyone had 3 or 4 shoes. They're black shoes, they're brown shoes, and all that kind of stuff. And it was just really funny. So there was like 100 pairs of shoes for this guy to shine. So I'd do that for you. Chris Carter. No, I know the name. But no, I haven't met him. I've met quite a few of the well-known guys out there. But no, I don't think so. Bear in mind, I stopped going to all the trade. I used to spend like a couple $100,000 a year going to trade shows, and it was sort of like my vacation. I don't do it anymore. I have kids now. Oh, Chris Gardner. No, I don't think I've heard of him. Chris Carter, I've heard of him, but not Gardner.
Forward. To sum up, a cross-check of the outcome of economic.
But anyways, guys, yeah, once you start making money, you want to make as much money as you can, and you want to give yourself all the tools and resources you can possibly give yourself to continue the success. So a bunch of computer screens, who cares? New services, great. Get it done. Whatever happens, right? Yeah, that's right, Jimbo. But like I said, I used to have newspapers flown in from Japan. I really enjoyed that. It was expensive. Eventually, I stopped doing it.
The implementation of structural
whatever it takes, right?
In euro area countries needs to be substantially stepped up to increase resilience, reduce structural unemployment, and boost euro area productivity and growth potential. This is particularly important in view of the overall limited implementation of the 2018 country-specific recommendations, as recently communicated by the European Commission. Regarding fiscal policies, the mildly expansionary euro area fiscal stance and the operation of automatic stabilizers are providing support to economic activity. At the same time, countries
so I wonder if he's going to say anything during the
need to
Q&A.
continue rebuilding fiscal buffers. All countries should continue to increase efforts to achieve a more growth-friendly composition of public finances. Likewise, the transparent and consistent implementation of the European Union's fiscal and economic governance framework over time and across countries remains essential to bolster the resilience of the euro area economy.
Yeah, even the USD Swiss franc is just gone.
Remains a priority. The Governing Council welcomes the ongoing work and urges further specific and decisive steps to complete the banking union and the capital markets union. And we are now at your disposal.
All right, here we go.
Carolyn Look, Bloomberg. Mr. President, could you give us an idea about the reasons why you decided on the specific features of the TLTRO 3 program? So, for example, why are the maturities 2 years? Why have you indexed it to the MRO? And also, why is the start date in September when the funding becomes relevant for banks' net stable funding ratios in June already? And my second question is what you would like to achieve with.
She's young, but she's smart.
Are you trying to keep the size of the balance sheet stable, or are
this
you
is the
trying to
ECB
add
channel.
Extra accommodation. Thank you.
Thank you. The design of the TLTRO responds to a variety of objectives, but the key one is the key objective derives from how the situation of bank funding looks like over the next few years. In the coming years, we'll have a congestion for bank funding caused by obviously some the coming to maturity of the existing TLTROs, the coming to maturity of a sizable amount of bank bonds, various regulatory compliances. And so the TLTROs, as it's been said in the introductory statement, preserve favorable bank lending conditions and the smooth transmission of monetary policy. Now, the precise design, whether it's 2 instead of 4, do reflect the changed conditions we have today. Now, further details, especially on the pricing and other details, will get to be known in due time. Now, on the second question, really, addresses the substance of today's meeting. So let me give you a kind of a broad account of how this meeting unfolded, and in so doing, I think I'm pretty sure I'll respond to some of the questions you intend to ask. So first of all, the decisions. It's 4 sets of decisions. We expect. So we moved the calendar-based part of our forward guidance from September to December. The second, we confirmed the reinvestment in full of the principal payments from maturing securities. Now, you understand now the importance of the chain element in our monetary policy. Having moved the calendar-based, so does the expected, or whatever the horizon is going to be over during which the purchases will take place to keep the stock unchanged. So you see this added accommodation. So to answer your question, as a matter of fact, you asked me whether this is adding accommodation. The financing conditions have been, well, monetary policy has been very accommodative, but also financing conditions, as a matter of fact, have even eased since our last meeting. And this is also partly due to the structure of our forward guidance, so that expected interest rates have gone down since the last meeting, and especially at the end of last year as well. So then we have the third element is the targeted longer-term refinancing operations that we've just discussed. And then we have the fixed-rate tender procedures with full allotment for as long as necessary, and at least until the end of the reserve maintenance period starting in March 2021. Now, what are the features of all these measures? First of all, they are data-driven. These are decisions that have been taken following a significant downward revision of the forecast by our staff. Second, you've seen and you just heard me saying that optionality is reiterated in all instances, which means that the Governing Council is both willing and committed to act when, if needed, amplifying the use of these instruments based on the data. And third is what I just said, is that all this takes place in an environment where monetary policy accommodation is already very substantial. Second point is, how did we get to take these decisions? And the answer here is that they were unanimous. There was unanimity. And I think given the complexity of the package, I think this is a very, very positive sign for the cohesiveness of the Governing Council and of our deliberations. Third, what is the general context in which these decisions have taken place? Well, we're coming, and maybe we still are, in a period of continued weakness and pervasive uncertainty. And that's why the forecast has been revised downward quite significantly. Now,
by the way, do you see like how much better swing trading is than just, scalping volatility off news? Like you could have sold it up in the monthly swing and have been done. Just done. You're not facing any more risk.
Comment in a moment about the pervasive uncertainty, but the factors that have originally caused this weakness, which are mostly of external source, are
absolutely, Pedro.
And so the uncertainty is partly related to how
think of the tsunami example.
These factors will continue affecting the world economy, the Eurozone economy, and confidence more generally. And there are two observations to make about the assessment of the outlook. First, the Governing Council expressed confidence. All members expressed confidence in the baseline, which means that we assess the probabilities of a recession as being very low, as well as the probabilities of a de-anchoring of inflation expectations we are indeed very low in our assessment. What are the reasons? Well, the reasons are the same that underpin the strength of our economy in our previous meetings, namely nominal wage growth continues, the labor market, though at this kind of slower rate, but continues to improve. Consumption remains by and large in good shape. Monetary policy remains accommodative and now is even more accommodative. And financing conditions, as I said, have eased up. In fact, they were already very easy and they eased up further. And there is a second factor that we've taken into account in maintaining this confidence, is that it's true that these external factors continue to be hanging on, continue to be
Keep me hanging on.
The economy. But it's also true that governments are responding in their respective jurisdictions with policies that are addressing these problems in US, in China. The second point to be kept in mind is that you've seen that the revision of the inflation path will basically says one thing: we have confidence that will converge, but we also, at this point in time, think that it's going to take longer to get there. So, and why is it going to take longer? Well, the weaker growth probably will further slow down the pass-through from higher nominal wages to higher price, higher inflation, and possibly also slow down the closure of the will also slow down the output gap. In other words, the output gap now is closing. So these two reasons are important to be kept in mind. Now, the other important part of today's decision is that we maintained the risk assessment as tilted to the downside. This isn't frequent because we usually say when we take some policy actions, the risks get back into balance. But it's happened on other occasions in the past, but not frequently. Why is that? Well, because we are aware that our decisions certainly increase the resilience of this Eurozone economy, but can they address these factors that are weighing on the Eurozone economy in the rest of the world? They cannot. So the threat of protectionism is one factor. Geopolitical considerations also related to whatever happens about the United Kingdom Brexit, or United Kingdom exiting or not exiting, or in the forms in which they will exit from the European Union. So the emerging market vulnerabilities, what's happening in China. We know that the Chinese government has reacted. The U.S. government has, the U.S.
Check that out.
policy changed. But for example, in U.S., we have to take into account that there is going to be a waning effect of the fiscal package. So a slowdown is projected there all over. So basically, our actions increase the resilience of the Eurozone economy. And so make us confident, keep us confident that convergence to a sustainable rate of inflation, our objective, will happen. Thank you.
Annette Weisbach, CNBC. Can I ask you about what you said a little bit earlier, that you're standing ready to adjust all of your instruments available? Does that also include the net asset purchase program?
No, it does not!
In case the economy is not going anyway better and the inflation outlook is going to worsen? And then I have a question on the underlying assumption of your growth and inflation estimates. Is the underlying assumption that US and China will come to an agreement on trade or not? Thank you.
The answer to the second question is that our projections take into account the protectionist measures that have already been implemented, but they don't project an assessment of future measures or of how the current negotiation will actually end. Your first question is, well, you've seen optionalities everywhere. Now the issue is whether we see contingencies that would justify the use of certain instruments or instead of others. And I don't want to speculate at this point in time. At this point in time, we've just taken all these decisions, and we think they are the right decisions and the adequate decisions to be taken at this point in time. But let me add one thing. We didn't tighten when we stopped purchasing the net asset. When we stopped the net
that
asset,
actually touched the monthly.
We didn't tighten monetary policy, contrary to what some of you say. I'm not even sure it's one of you, but I mean, just it's been said. We didn't tighten at all. We continue. Just to give you an idea,
overall this is ugly. Anyways, all of this is ugly.
It's about 42% of the Eurozone GDP. The Fed is about half of it now. And in order to keep this stock unchanged, we continue purchasing something the order of 20 billion euro a month of bonds. And this happens in a context where the debt to GDP ratio in the Eurozone is actually falling. So the simple action of maintaining a stock unchanged in this context actually is a continuous easing, because interest rates are pushed downward by this action. So, and you can see this because
Steelhead,
June last year,
keep it professional.
Interest rates have gone down; they keep on going down.
Treat your fellow chat members and viewers with respect. If you can't do that,
and if you
adios,
what I
muchacho.
said is the chained element of this, of the horizon over which we'll carry out purchases to keep the stock unchanged, moves together with the forward guidance. But to finish the answer, what today's decisions also say is that we changed the calendar-based part of our forward guidance based on the information we have today, and it's data-driven. In this sense, we are very open.
So the daily swing just got the doors blown off. Look how beautiful that is, huh? Today's sell zone. Yesterday we didn't have a sell zone. Remember that? Monday's sell zone. Thursday, Tuesday sell zone. Monday sell zone. Remember we were talking about staying in your trades longer than a day, creating a swing.
Trade-off in terms of extending the guidance to the end of this year,
boy, it's really worked out.
2020, in order to not have to make any commitment to move to some sort of tiered system, and in order to have the unanimity behind the decisions that you've had today.
And remember, I prepared you for yen strength.
That even though the guidance on rates isn't as extended as far as markets are now foreseeing for the first rate rise, there is a broad sense in which you've got ahead of the curve today, and that you have really surprised people by not only announcing something on Teltros, but also announcing that you shifted your message on forward guidance. So can you maybe explain a little bit about the reaction function here, why you've decided to deploy these shock and awe tactics? Was there something in particular that has scared you that you've seen in the recent data? Thank you.
Thank you. Several members of the Governing Council presented the option of changing the calendar date of the forward guidance to March next year. In a way, that was an option. It was, and the other members discussed what the consequence of a protracted period of time with negative rates, so lower or low for longer, could imply for banks. But there was no trade-off between the two. There was no trade-off.
So it looks like bulls did not get their entry on euro dollar.
Package that basically reflected the views of all the members of the governing council. And I think that's what I now the second part of your question is whether, well, markets have pretty well understood our reaction function, and so in placing the expected date of the lift, the DFR, sometime in 2019. Before it was later, now it's moved back.
You guys remember that time I smoked a cigar with you when I was in Hong Kong? Had a suite at the Ritz-Carlton, and they brought me the cigar.
To give credibility, because clearly, if you have expectations, market expectations.
And for me to do the webinar, it was nighttime, so I smoked a cigar with you guys. That was fun.
Of the guidance, then of course credibility becomes an issue. In this sense, I think we've, if anything, enhanced the credibility of the forward guidance with today's decision.
Right on, Luis.
Thank you. Balázs Korányi from Reuters. In your statement, you said there will be some incentives built into the telcos. I'd like to find out a bit more about this. What kind of incentives? And is the MRO the lowest rate banks could pay, or do the incentives take it lower, possibly? The second question is about the supervisory board. And I'm curious why you left 3 positions vacant. A 4th one is going to be vacant very soon. Why are you not picking people to the supervisory board? What's the benefit of depleting the supervisory board?
Thank you. The first question is really
Euro dollar.
I can't say more than I said in the introductory statement. The pricing, the shape.
So it's blown through this level.
And other details on the telco would be made known in.
If you're doing a monthly swing, so there's no weekly swing. The monthly swing is no. I disagree.
It's the intention.
Steelhead trading. There's no pivot swing anyways. You could be basing your swing on something else.
For credit conditions to remain favorable.
So the next thing is you'd look at this as support. You can drop into a small time frame like a 1 minute.
On the supervisory board. Yes, it's a process which will be carried out in a completely transparent way in the coming weeks, and it's with a change in the chair and so on. So everything's been delayed, but will take time soon. Will take place soon.
Jan Malin, Handelsblatt. I have one question on the timing. Markets were quite.
But under my definition of swing, that's not a proper swing, but it is support. And if you're a bull, you could look for a double bottom here and confirm it on a small time frame.
Before the meeting, that there's such a high uncertainty.
That's not necessarily a swing in the way I teach it, though.
It would be maybe better to wait to see how this if this uncertainties materialize or not. And my second question is on your forward guidance. You kept the state contingent part and the time contingent part. Why have you kept the time contingent part? Because you also said it could be pushed further ahead, and would it not give you more flexibility to just have the state contingent part? Thank you.
Thank you. The presence of the 2 things were present: pervasive uncertainty, but also.
Remember, you use technical analysis to confirm or deny.
in the projections.
Okay, this denied.
So the fact that the climate has become more uncertain doesn't mean that one has to stay put. So you just do what you think is right. You temper, however, what you're doing with the consideration there is uncertainty. So in other words, in a dark room, you move with tiny steps. You don't run, but you do move. Or said in other words, you try to be proactive rather than reactive to contingencies, because
No, I don't use lagging indicators for that steelhead.
In an unforeseen and unwanted way. So that's the answer to the first question. The second question,
I do not.
The R4 has been designed with two legs, the state and the time, and both of them reinforce each other. Both of them give credibility to each other. To have a state only is kind of, as you said, perhaps gives more flexibility, but at the same time,
But also price action is leading, not lagging.
Thank you.
Mr. Stumpf?
Hi, Andres from Expansión. Could you elaborate a bit more in the chosen of the TLTRO with T instead of an LTRO? What have been the reasons for this? And just one question more.
Oh, I don't use Elliott Wave.
Make any comment on the
I hate Elliott Wave.
Statement of the ECB that has confirmed that you are going to end your mandate without hiking the interest rates?
No, I make no comments. It's not. First of all, it's not me. It's the governing council. But I have no comments to make. Now, the other point is actually it's been discussed. What the first ELTROs were quite effective for the time when they had been designed, but they were used not 100%, of course, but they were used also to kind of buy sovereign bonds. At that time, the yields on bonds were high, and banks, especially in parts of the Eurozone, where to lend to the economy was very risky because these parts were in huge recession. They bought sovereign bonds. What then we wanted to achieve with the T was
I do not use Elliott Wave. Never liked it at all.
To make sure the banks
or harmonics. Never liked harmonics at all. Those are two things I just stay away from.
And to firms and households and the private sector, not to buy sovereign bonds.
Ms. Bufacchi? Isabella Bufacchi from Sole 24 Ore. I have two questions, Mr. President. One is on markets that have been surprised, and actually I think have also been surprised by these moves, bold moves on an accommodation that was already very ample. Is your message not only to the markets but also to European governments? Is Europe, do you view, reacting as you are reacting in a bold manner to the deterioration of the economy? And I know there is a lot on the plate, so I don't want to go too far on the toolbox of others, but I've seen that Philip Lane now is confirmed as new executive board member, and he's also linked to a project of safe assets. And do you feel that the ECB has enough in its toolbox? Do you feel that Europe has enough in its toolbox as well? Thank you.
Well, thank you. I think, well, let me first respond to the first part. It's easy for us to plea for more action at European level in all directions, institutional policies and so on. I think we should do it, but we should be aware that these are political decisions that governments can take or have to take, but they have to
Yes, it can.
explain
Pedro.
to their citizens. It's relatively
Thank you, Game
easy
Football.
to
Welcome to the family.
advise,
You too, Pedro.
about the right policy. Much more difficult it is to implement it in a democratic society, of course. So I think certainly I've said many times the European construction is still fragile. The completion of the monetary union is essential. The completion of the banking union is essential. Capital market union are all essential things.
Yeah, but the thing is, though, they're not doing enough, in my opinion, and that's why they're getting slapped. But the euro's moved.
Don't seem to be an order of magnitude that could stop the whole process. So when the political contingencies, when the political
just trying to get to the volume
align, I'm absolutely confident that we'll see fast progress on all these fronts.
There. All right. What are we gonna do? Oh, I know what I was going to talk about. All right, so like when we look at how much many of these euros, so we'll just look at euro dollar. I mean, come on, right? It's moved quite a bit. And maybe, so the interpretation of what the ECB is doing is it's not doing enough. So let's talk sort of like long-term, short-term, long-run, short-run. Has this moved enough? Has the punishment been enough? Well, there's sort of the current top and bottom of recent history. And then here's, post-news kind of reaction. So let's kind of just take a look and measure some of this stuff. Okay, it's not even 100 pips. So can it fall further? Sure, 100 pips is not a lot. Okay, and then here's the other thing. If you had done a proper swing trade at the beginning of the month, okay, at the beginning of the month, that's all you had to do, is at the beginning of the month, you were a bear. Not too complicated. What was the plan? The entry is straightforward. This is an easy entry. This is an easy trade plan. And your target was here. So if we've moved here on the news, can we move down to the gray area at the bottom? Oh, yeah. Yeah, does it have to be straight down? No. So you can ask yourself, along the way, so if we're going here, along the way, oops. Yeah, there we go. Along the way, will it go straight down? No. Well, if you understand price action, okay, if you understand price action, it's likely to come down to some level of support, and there's a couple of different levels of support here. Then it'll make a lower high, and then it'll make a lower low. So at the very least, we're going to have some sort of move like this if we're on our way here. Now, the other scenario, which is possible but not likely, is you go from an S1, R1 inside weak. I wouldn't think that under these circumstances. Okay? But could we, for example, have it fall a little further today and then have it come all the way back to something like this and then NFP drop it further? Yeah, totally. Okay. Okay. And what we're doing here is confirming or denying the entries, right? So this is clearly a bear setup, and that's a reasonable opportunity. Okay. Cool. Right on, Steelhead. Glad you agreed. Now, please stop dominating the chat. Okay, some people might actually have questions. Okay. So, take a chill pill. Okay, Steelhead, calm down, chill out, take a back seat. Well, the idea here, Steel, is that I want to be available if people have questions so I can have an opportunity to explain to people that don't have 16 years of experience. So if you have 16 years of experience, you're welcome to hang with us, and I have no problem with the contrarian point of view. But this isn't about you explaining to the viewers how smart you are. This is about having newer people ask questions, and so that they can learn, or experienced people sort of just verify their thoughts, or all that kind of stuff, right? Those are pivot points, Garrett. So I use monthly pivots, weekly pivots, and daily pivots. Yeah, cool. Right on, Steel. Well, Langa says, Wayne, was the euro going to go, technically drop, or was it all about the news? And that's the very interesting thing about trading. Now, fundamentals, or you can boil it down to news, even though news isn't necessarily fundamentals, but news is part of fundamentals. None of this is really a shock. We knew there was going to be a downgrade. We knew that they can't raise interest rates, nor can they even consider it for a very long time. And look, we knew there was going to be a new program. We just didn't know what it was going to entail and the timing of things and stuff. But none of it is really that much of a shock. Okay? So you can see that traders are in this trade technically. They may have not known today's events, and they may not have known other events, but they can be bears, okay, on this euro dollar, for example. And using technical analysis of market conditions, because that's all technical analysis tells you. What are the market conditions? Are we trending up? Are we trending up quickly, or are we trending up slowly? Is it moving sideways? If so, what is the top and bottom of the range? Is the market falling? If so, is it falling quickly, or is it falling slowly? And the understanding how fast or how slow the trend is moving tells you how vulnerable it is to reversals and retracements, right? So in this case, anyone that was already a bear on euro dollar, and oh my gosh, there's so many reasons to be bear on euro dollar, right? They had a perfect textbook opportunity at the beginning of the month. I even talked about it in our swing trading group, right? There's a quad top sitting in a sell zone on top of an M3. Dude, if you're a bear, set it up, take a shot, take a walk, right? And we were talking, selling at 114, going down here to whatever it was, 112.5 or 111.5. I mean, that's what swing traders do. Now, at that time, do you know if it's going to work? And I'm talking about it in here. At that time, on the first day of the month, or even the last day of the month, on this day, do you know if you're going to make money or lose money? Absolutely not. But do you know if you're a bull or a bear? Oh, yeah. Okay, good. How about a 1, 2, 3, 4 top? Okay, there's a quad top. What do bulls do at a quad top? They get out. Never made a higher high. You can kind of call it a higher high, but never got out of the box. And then right here, okay, there's a quad top. At the same time, because it's a Friday, and we were actually in this zone when I was doing the swing trading group. So we were there live, and I talked about this as being like an oh my gosh moment. If you are a bear, that is the M3 for the weekly in the bearish sell zone. So you have all the permission in the world, either on Friday up here or on Monday, if it gaps down, right? You have a choice. We don't know when you want to enter, but it's either going to be Friday afternoon here or Sunday afternoon open, which is here. You would take a shot. Under those circumstances, this is conservative target for the weekly. So this is a weekly sell zone. There's the weekly target. The monthly sell zone is that giant yellow area. And if you took that trade and you had the courage to stay with your trade, this is the target. Now, we're here now. Do we know if we're getting down to this area? No! Neither like we did know there. But it's called a trade plan. And the cool thing is, if you entered Friday afternoon or Sunday afternoon when you're supposed to be swing trading, this is what swing traders do, and you were wrong and it went like this, guess what happens? You lose a little bit of money. Yeah, but you face that every time, but at least you know how much, and it's not much. Could even do this for you if you wanted to really, right? Because actually, technically, a monthly swing, your stop's supposed to be there. But anyways, you probably wouldn't. So if you are a bear and you got a quad top, ask yourself that. If you're a bear and you got a quadruple top at a profit zone where you expect bulls to get out of the market, and you open up at a weekly M3, which is a sell zone, right, in a monthly M3, which is a sell zone, what's the probability? Remember that conversation from a day or two ago? What's the probability it goes up and blows through all that resistance? Is it 60% it's going to blow through all that resistance, or is it 40%? Or is it 30? Or is it 25? And ask yourself, okay, well, if I'm going to risk 50 pips, let's say, and I have a 50-50 chance of winning, I got to at least make more than 50 pips on this. I got to make more like 100. So if I'm selling at, let's say, 114,000, another obvious area because it's a psych level. So if you're selling at 114,000, where's 113? Here. And you're like, oh, well, my conservative target pays for the 2-to-1, right? So your worst case scenario based on your plan is you'll only make a 2-to-1 risk reward ratio. You only make 100 pips for risking 50. But then you're like, well, what if I stick it out? What if it's down here? Well, you're going down to, let's call it 111.50. Right? So now you're making 3.5 to 1. You're like, oh, well, I can do that. And you're done. None of this will be relevant to you unless you made a fundamental bias regarding euro or a technical bias regarding euro dollar. If you haven't done that, then all of this is just going to seem gobbledygook to you because you don't know what you're doing. You have to know what you're doing. Yeah, right? You have to know what team you're on. Are you a euro bull or are you a euro bear? Imagine a soccer player that didn't know what team he was on, just running around the field trying to get the ball. Good luck, right? Well, right on, Garrett. You're welcome to hang anytime. Just like I tell to everybody, just treat everyone else around you with respect and with dignity, and you're welcome in our family.
Mr. Draghi. The first is a follow-on question to the gentleman to my left. Are there any other regions or industries that you think are particularly vulnerable that you may be keeping an eye on? The second question is, do you have any concern that equity markets are a little bit more concerned about a recession than you may be? And I say that because I'm looking at the equities that are doing well. They're very defensive stocks, cyclical stocks. So do you have any concerns that the markets are more bearish than you may be?
Well, I'm not sure that equity markets are more bearish because they actually regained everything.
He's a central banker. He'd be dovish, not bearish. But anyways,
they gained it back and plus. So, but we have to see what are the sources of this increase in stock prices. In some parts of the world, this is caused mostly by earnings expectations that are. In other parts of the world, this is caused by a decrease in risk premium. And earning expectations actually appear to have less of an influence in explaining price increases. So I think that says something about the expectations about the economy, the future evolution of the economy. Mind, there's another factor which actually quite important role, especially at the beginning of this.
Cool, sure, Trey. Thanks for hanging with me, guys. I know we didn't really plan on this, but
if people have a lower
I'm trying to avoid doing homework today.
For the stocks, and therefore
I have to calculate like mean reversions and mean regressions by hand,
or expectations
and
about
I
discount.
don't feel like it quite yet.
Thank you.
And I did microeconomics all yesterday. I'm like, I just don't want to do it. Oh, is that it? Dang it! Lazy Europeans.
Is Donald Trump saying an agreement on industrial goods is much simpler to negotiate and could build trust between the EU and U.S. Trump's saying there's no support in Europe for a full comprehensive trade negotiation with the U.S.
All right, goodbye, Steelhead. Nothing bugs me more than that. Look at that. Turkey's February cash budget balance. It used to be 2.5 billion positive. Now it's negative 26 billion. You're like, whoops. What? Anyways. Fake news. Yeah, well, it won't be 111. It'll be maximum 111.05. But I guess if you need the extra 5 pips, Call it
We're
an
about
Arctic
10 minutes
turtle.
into the U.S. trading session, and we're seeing the Dow trade down 108 points, the S&P cash down 10, and the NASDAQ composite down just shy of 40. The U.S. 10-year no future 122.13, up about 0.25%. In the future, the U.S. 10-year yield down 3.5 basis points. We've seen global interest rates move lower in the wake of the ECB announcement.
When drawing business cycles, wow, how do you draw the reference to plot against it?
We're seeing selling pressures extended now for the equity futures, the NASDAQ 100 futures, and the S&P minis testing below the overnight lows.
Well, typically what I'm looking for in a business cycle, specifically
2765.50 in the S&P minis,
is the difference between potential GDP and real GDP or actual GDP. And so the Fed offers that. So the Fed offers some really good research, and you can actually download their data and then have it plot for you. But they do a lot of that for you just straight up.
President Trump tweeting they're on track to apprehend more than 1 million people coming across the
Right on, Michael. You got a nice conservative one.
Border Patrol and others who are working in a broken system.
So look, that scalp worked, and now we're on a pivot, right? So what's the reverse of this going to look like if you were a bull? So like the bearish trade worked. It's not a lot of pips though, right? What is it, 112.50 to 1? Yeah, I mean, it's 25 pips or something. But what if you're a bull? You're constantly looking for support if you're a bull. So you're going to repeat this over and over and over and over again if you're a bull. Okay? A bear is doing like this over and over and over again. And I'll actually do this. I'll keep. Well, this is why I don't use these trend lines very much. Hang on. I hate this. All right, well, whatever. So over and over and over again, I constantly create my new sell zones. Okay, but bulls have to recognize that it's a bearish move and you're a bull, which means you want to buy. So you have to wait for two things in a scenario like this. One, identify obvious support. And two, the reversal pattern, like a double bottom, higher high, higher low. It'd be more like this. Okay? And you'll notice that for your patience of waiting for the double bottom, higher high, you reduce the risk and you'll get almost the same price. Whether you bought here or here, it's going to be almost the same price, but you'll have significantly less risk. Okay? Did anyone take the scalp here? Ricardo, what's going on? What is the cost to trade the news? You know what? I have no idea. Really? I have no idea. No, I do not. Should I? Oh, well, you can use anything for a mean reversion. Think of a pivot point. Oh, sorry, not a pivot point. Let's clear this. Let's go to something basic. Well, it probably already has it on there. Let's go to scan. Yeah, it has it on there. Bollinger Bands. Okay. How does a Bollinger Band work? Well, it's measuring standard deviation, right? Standard deviation of what? Well, you take the variance right? And you take the square root of the variance. Okay. And involved in that process, you look at the mean.
Here in the early going, 27.62.50 mini to cash market.
Okay.
Trading down about 14
For
handles.
variance, you need mean.
57, we're about 7 handles or so.
Let me turn this guy
200 day in the U.S. S&P cash market.
Because you can't calculate variance without mean. You have to know the average. So how far from the average is a variance? And then over time, of course. So you need a mean, right? Remember mean, mode, and mean, mode, and which one am I missing? Mean, mode. Oh, median, sorry, okay. Okay, so this is the most common number, this is the middle, and this is the average, okay? So to calculate variance, you're going to need, in this case, the average, okay? And from that, how far is price tending to be away from the variance, or a mean away from the mean, right? And then you find out, well, how far, which is a deviation, how far is the normal deviation from the mean? And you take the variance and you square the variance, and you get the standard deviation. So SD is equal to the square root of the variance. And to get the variance, you need to calculate the mean, not the mode, not the median. So how does one do that? Well, let's take a look at what's going on. By the way, do you get this stuff from other people? That you can just like start breaking down the math with them? Okay. So this is using an average 20 SMA, I guess it is. What is the average over 20 candles? Okay, but actually what they've told us is that is the average over, right? But it's calculating 2 standard deviations. Okay, so that's 1 standard deviation, and then of course we can add another one now. Insert indicators, bands. Make this. Oh, that's fine. Make this pinkish, I guess, whatever that is, red, and 2 standard deviations. Okay. And so we're getting sort of a, right? Oh, well, over the period. Thank you. But you need that, right? But that's, the end comes from the mean. So in that case, the price, add up all the prices. So the sum of these prices over the period will get you a mean. And from that, you calculate the variance, right? Cool. Okay. So we're finding like how unusual is this move relative to what usually happens? Is it extremely common? Is it extremely uncommon? But I find that over time, so I used to use this, but I found that it wasn't that helpful on the long run. And what most people were teaching, like when I popped into other people's seminars at conferences, they were teaching the wrong things, like, ooh, just ride the band. And then you listen to to John Bollinger, and he's like, I never said that. These are Bollinger Bands. John Bollinger speaks at conferences all the time. And he's like, I never said that. That's not what that means. Like people started just throwing trading strategies into this, and he's like, that's not what that means. Okay. So anyways, so that's the average, right? Somebody asked me a question about the average. You're going to need an average. And then since I'm drawing anyways, someone asked about business cycles. So you can go to the Fed, and the Fed will tell you potential GDP, which looks like this. So we'll call this Y star, Y meaning productivity, or no, production, GDP. Okay, Y star is going to be your potential GDP. And then the Fed will calculate actual GDP, and these are business cycles now. And then, of course, with that, if you take another color, you'll probably find that the Fed's going to have a monetary cycle. Right, and they're always kind of like this, because it's always after the fact and it's steeper. Okay, and so you'll look at where you are, because what matters is, are you moving back toward potential GDP, or are you moving up toward potential GDP? And this matters, this is especially painful being in this area here. This is where you get, and then where do you get filthy, stinking rich? Right here. That's how you do it, guys. The secret to life is knowing up here that this is going to happen and actually do something about it. Then the second thing is, well, there's blood in the streets, you're buying in this period. Right? And then unfortunately, somebody said that this happens 3 times in your life. Right? Once before you understand, right? Once when you don't have any money. Once when you don't understand. Once when you're not ready. And then once when it's too late. Right? So like in 2001, this could have been 2001. This is 2008. Right? When's the next one going to be? 2022 or 2023? So I'm actually set up prime for this one. So I'll probably quadruple my net worth between 2023 and 2028, which is really good. And I'll probably just, I don't know, buy a country and live in it. Cool. All right, guys, it's been 2 hours and 18 minutes. Covered a lot, huh? Yes. Yes, the US dollar typically, historically, Stanislaus, is gold is the anti-dollar. It's not always true, but gold is priced in dollars. Okay? So you have a bar of gold. The bar of gold never changes. It cost you it cost you 100 tons of oysters. So you have to do things like gold, oysters. Okay? 1 ton, 2, 10, 20, 30, up to 100. 1 ton, 2 tons. So you start drawing these weird slopes and stuff like that. If you spent all your money on gold, or if you spent all your money on oysters, you're going to have a curve, and you're going to have to make a choice, and you're probably indifferent between gold and indifferent between oysters, but you'd like to maximize your utility. And so anyways, that's a weird example. But my point is, gold is gold is gold is gold is gold. Now, there's supply and demand for gold, but gold doesn't change. You know what? Let's just do it this way. There's a bar of gold. That bar of gold changes. So it never changes, but what I can trade it for changes. So I can trade it for money now, but if there's a zombie apocalypse, I might want a gun and not, or more importantly, probably bullets. Okay? I won't need money. I'll be in an apocalypse, but bullets will be very, very valuable. So I might want to change, right? My dollar becomes less valuable. Bullets become more valuable. So now I say, okay, I want, right? Someone wants to trade to buy my gold. So maybe someone else comes along and they want to buy my gold, and they want to then later on trade it for bullets. So he comes up to me and he's like, oh, I'll give you $1,200 for your bar of gold. Like, $1,200, I don't need any money. Right? I don't need, that's the old price. That's what it was worth before the zombie apocalypse, but society is collapsing. And the guy's, well, you know what? I just ripped off the central bank. I will give you $1,200 billion for your bar of gold. And I'm like, yeah, okay. I'll take your $1.2 trillion. Yeah, sounds good. Good trade. And now, why? Because my dollar is nearly worthless. But someone else comes along and says, hey, Wayne, I will give you one box of AK-47 bullets. Still has a Walmart price tag on it of $27.95. I'll trade you these bullets for your gold. I'm like, okay. So now I gave up my my $1.2 trillion offer, and instead I traded for the $28 worth of bullets. But the gold hasn't changed, right? So I'm trying to give you this example to explain, if the US dollar falls in value, it seems like, let's say gold is constant. Nothing ever changes for gold. Now, we know supply and demand for gold changes, but let's say nothing else changed. Well, if the value of the dollar falls, you will have to pay more dollars to buy my gold, even though the gold hasn't changed. It's just your purchasing power and its parity to gold has changed. So you will need more dollars, these are plus signs, more dollars to buy the same amount of gold, because your purchasing power towards gold has fallen. So very often when the US dollar falls, gold can rise. Now, for example, the US dollar falls when the economy is doing awesome, and that creates inflation. And okay, and as inflation goes up, price of gold goes up, partially because the value of the dollar has fallen, but also because of inflation, which is the same thing, really. People are concerned that they would rather just own the gold, because gold is gold is gold. And it's not an M1, it's an M2, but whatever. Actually, it's not even M2, right? It's an M3. This is cash. This, right? This is a checking deposit. Checking deposits are M2s. So this is gold is probably more like M3 because you have to find someone to convert it to cash. It's liquid, but it ain't that liquid. Okay, I can go to the grocery store and buy something with cash. I can go to the grocery store and buy something with checks. I can't go to the grocery store and buy something with gold bullion or gold a gold ingot. Excuse me, madam, could you break this gold ingot? Right? So it's not quite, so it's an M3. So anyways, so hopefully that explains it a little bit. And just do some Google now and do some research and find out why they seem to have a relationship. Peter, your fund is buying physical gold? I didn't know you were doing that. Well, if you ever need physical gold, I can get you as much as you need. Right, Stanislaus? Everybody else. Hey, if you guys are new, please subscribe, right? So that on Monday I can invite you to my Monday webinar. It's just YouTube gives you the alert and goes pa-ching. Also, tomorrow I'm at FX Street for Trade Non-Farm Payrolls Live, so make sure you subscribe for that. Oh, yeah, but all right, so you buy like small amounts. You don't buy like a ton. I can get you a ton of gold. But if you wanted to buy like 500 pounds of gold and then sign up for a contract, I can do that as well. That's physical gold. Now you got like, right? So you lodged a bunch of money. Maybe we'll use Brinks and I'll send it out to you in Brinks. Who knows? But anyways. So peace on earth. May the pips be with you. May your profits be above average. Thank you for everything today. Make sure you guys are clients of Trader's Way, even if it's a demo account. Remember, pay it back, guys. You need to thank them for making these webinars available to you. And you do that by opening accounts, first with a demo, but then when you develop confidence in your skills and you want to trade real money, then please consider Trader's Way as the prime broker for your successful Forex trading business. And like I said, don't forget to subscribe. And associated with Forex.Today, Trader's Way, or FX Bootcamp, there's 4,000 YouTube videos associated with me. So watch them all. Peace on earth. May the pips be with you. May our profits be above average. Cheers.